This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi everyone, Mathis Connor here with Connor Management Group, and this week we're going to look at the best overvalued stock to sell right now. Today is Wednesday, December 10th, 2014. I'm about a day behind from our normal publishing schedule, but things happen. All right, as we'll see, this stock is in the education and training services industry, and we see its 6-month downside potential at negative 20.6%. On to the second slide, we see that the name of this company is the Apollo Education Group. Its ticker symbol is APOL. Once again, the industry that it's in is education and training services, and we see its 6-month downside potential at negative 20.6%. On to the quick facts slide. Here's a business summary description for Apollo. Apollo Education Group Incorporated provides higher education programs primarily to working adults at its campuses and learning centers in 36 states, Washington, D.C., and Puerto Rico. It also offers programs worldwide through the internet. The University of Phoenix is the largest subsidiary and also the largest for-profit private university in the United States, accounting for roughly 90% of 2013 tuition revenues. So basically, Apollo Education Group is also basically the University of Phoenix, which is, I think, a more widely recognized brand. The website for Apollo is www.apollo.edu. Apollo is headquartered in Phoenix, Arizona. They were founded in 1973, and they have 39,000 employees. Once again, the ticker symbol is APOL. They operate in the services sector, and they operate in the education and training services industry. The annual revenue for Apollo over the last 12 months was $3.0 billion. The net income over the last 12 months was $216 million, and their cash from operations was $376 million. The current market capitalization for Apollo stands at $3.6 billion. Onto the products and services slide. We really could not find much to show. We have the Apollo Group logo. We have a building with the Apollo Group sign on the side of it. Their materials had pictures of graduates and students getting together for different activities. And we also have photos of the executive management team. So not really too much to show. Onto the metrics slide. The annual revenue for Apollo, once again, stands at $3 billion over the last 12 months. The net income is at $216 million, and the cash from operations stands at $376 million over the last 12 months. The operating margins are flat. For 2013, they were 23.0%, and for 2014, they're tracking to be 23.5%. Onto the valuation metrics. The trailing PE ratio right now is at 13.4, and the forward PE ratio for Apollo is 17.0. So when you have an increase from trailing to forward from 13.4 to 17.0, that implies analysts expect earnings to decline, and that's something you'd like to see if you're going to short the stock or possibly buy put options on the stock. And as supporting evidence, the PEG ratio is at negative 21.6, a good thing when you see a negative number in front of the PEG ratio, that's for sure. The price to sales ratio is at 1.2. The price to book is at 3.0. And the enterprise value to EBITDA ratio is at 4.5. The recent closing price for Apollo was $32.35. The 52-week low was $23.30, and the 52-week high is $35.92. So the stock right now is closer to its high than its low. The 20-day moving average for Apollo is $30.98. The 50-day moving average is $28.24. And the 200-day moving average is $28.86. So there's really not too much to tell you with such a tight range on the moving averages. The average daily trading volume is at 1.3 million shares per day, so it is a liquid stock. The beta for the stock is at 1.4. So the stock tends to go up more when the market goes up and tends to go down more when the market goes down. And the dividend yield is at 0%, so the average dividend payout ratio is also at 0%. On to the price chart for Apollo. Apollo has definitely had a volatile ride over the past year. I mean, the stock started out around $24, and then it jumped up to around $34.50 a few months later, and then it pulled back down to around $24 as recently as October, and now it's high again at around $32 to $33. So the stock has been volatile the past year, and on a net basis, the stock is up 30.15% over the past 12 months. Now, here onto the summary slide. Overall, the financial statement quality of the company is what we would consider good. I mean, the debt they have due over the next 5 years is only $55 million, and their net income for 2014 is looking to be about $260 million. So they can handle their debt, and the total debt that they're carrying stands at $70.9 million right now. So the financial statement quality is what we consider good. The operating margin trend, as we mentioned, it's flat. It hasn't really changed much over the past year. The price pattern trend is increasing, although the price has been volatile. On the net basis, the stock is up 30% over the past 12 months. And our overall market outlook is neutral, so we don't see the market helping or harming Apollo anytime soon. And the recent closing price, once again, was $32.35. And the 6-month price target we have is $25.69. So that implies a 6-month downside potential of negative 20.6%. Now, Apollo's, they've been facing increasing regulatory scrutiny. Their enrollment numbers have declined quite a bit this year. The number of students they expect to have total 230,000 versus the prior year total of 301,000. So that is a significant decline. As mentioned, cash flow per share is expected to decline, as well as earnings per share and revenues. So the company is just facing headwinds. So yes, the stock has increased 30%, but the near-term outlook through 2015 is definitely not bright for this company. So we expect this company to face a 6-month downside potential of negative 20.6%, and for these reasons, we believe that Apollo Group is the best overvalued stock to sell right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Bye. Hi, this is Matthew Connor from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Content Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes, and for you guys on YouTube, I'd appreciate thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why the stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also mechanical engineering, and I have an MBA in finance from the University of Chicago. So hey, that takes care of my educational background. Basically, bottom line is to see, I did a lot of schooling. What my career experience has been to date. I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA, and basically I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager. And basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these things will be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Content Management Group and the development of all these videos and podcasts you've been seeing and hearing. And, I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week. They're pretty comprehensive and pretty thorough. The algorithms use fundamental and technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Content Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to CEOConnorMG.com. That's www.connormg.com, or you could go to our website and you can see a presentation that compares Content Management Group side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that the technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trades, the minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size is probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, let's see. Additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience, and there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast about thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers 2 newsletters, both weekly, 2 weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to cmgstockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward, and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.